Hello, this is Pat Walker at Mission Winners, and I'm making a video for Harry. Harry, good job on buying the NVDA. Good. I'm with you there, okay? We own it a little lower, and we bought more, okay? At the low of the day is 315, and you're exactly right. Where is the recommended stop? Here is a great real-world tactic. This is not textbook. This is the real world. We're looking at the chart. On a daily chart, I do not want it bleeding back into the highs of this bar. You can say, well, geez, that's freaking 321. That's too far. I'm in agreement. So here's what we do. Take it down to the hourly chart. You can say, well, it's running up there. That's nice. Where would I get concerned? You could say just taking out the lows of this bar could be a potential problem. And I'm in agreement with that. Would I sell all of it? Oh, no. But maybe a portion? Possibly. Let's take it down to 30-minute. This is the hourly. And again, I'm going to go back. Here's the daily. Here's the hourly. This is through Friday's close. Here is the 30-minute. Now you can see that little shelf right here that it lifted through. And it did it, this little 2 bars here. I love to do this. Right there. Those tops right there. Taking out those tops. Let's take it down to 10-minute. And I see this little shelf right here. You see these volume igniting bars? This bar right here? That was real volume. That was massive. So now looking, and I'm not going to go down to 5. I don't really like to do that. Where would we be concerned? If it starts bleeding back into the highs of that bar right there. Because it was the next bar that it triggered. The high on this bar is 334.49. 334 and 49 cents. And you can say, how do I know that? See where it says H right there? H. Watch when I put my cursor on that bar. 334.49. I'd be a little concerned if it bleeds back there. I would sell probably 1/4 or 1/3 of my shares. Why? Because the best ones don't do that. They just push. They just push away. Would I sell them all there? No. Now, I want to take this a step further, though, because you ask a very good question, Harry. Let's go back, sir, and look at the daily. There's a little pennant formation here. Why were we buying this? It is a leading stock. We own lower, okay? Then we started buying, and it lifted up. It's a MAXLIST stock. It is a market leader. There was heavy volume. There is sheer momentum here. The market action was picking up also, and you could say, well, how can you say that? Here's the NVDA daily. Here's QLD. Take QLD down to hourly. You can see it picked up right there. Take it to 30-minute, chopped around a little bit, but look right here. The last 2 bars of the day, there was volume coming into QLD. We factored all that into our equations in the thought processes. So let's be pointed with NVIDIA right now. Where am I going to be concerned? I'm going to be really taking out the lows of the day. Heck no, we're not going to give it that far. That picture, and I know you already have, and this ties in with your question. That's too far. That chart would look, well, the chart's broken. We have to find an earlier spot to sell. And I will tell you, go back to the 30-minute. I'm going to be concerned if I start seeing, well, I already have it there. See my price alert right there? I already had it in, that red bar. Starts to hit that, I'll lower it just a hair. If it starts to hit that, I will sell a little bit off. And you can say, why? The best charts just push away, and I don't want to be tested on it. And so I keep losses extremely small. This is a swing trade setup. It is more aggressive. So we measure and control risk 2 different ways. Part number 1, we don't buy as many shares as a long base breakout. Part 2, we manage those shares tighter. So getting back to your original point, am I going to give this stock all the way down, taking out today's lows, or Friday's lows, excuse me, I'm sorry. Heck no, we will be selling sooner, looking at the hourly chart, looking at the 30-minute chart, looking at the 10-minute chart and saying, and again, right there, there's a little base right there. See that right there? Going across that yellow line? There's a little base right there. Had volume coming into it. Look at the volume pickup on that bar. Right there. It's heavy. I do not want that bleeding back into that base. I do not. So we'll run it much tighter. And I also, last thing I want to say, I don't day trade. I'm not sitting here looking at 5-minute charts saying, hey, we're in, we're out, we're in, we're out. No, no. But conceptually, going back here, this makes sense. This broke out of this little pennant formation on really heavy volume in a good market. And I do think the market's good. We'll assume it's good. If it's a good market, this should continue onward. It was good right here, and this was a good move. Okay? It's good here. We'll see what happens. Anyway, I hope that helps you, but pointedly, there ain't no way I'm giving that down to the low. That's too big. Nope, I don't do that. We run it tighter than that. And that's where coming in and looking at the daily, the hourly, the 30-minute, and maybe even 10-minute will help us fine-tune an entry, but also help us fine-tune a potential exit. I'm sorry if this video went longer, but this is a very important question, and I take every question very seriously. So thank you very much. I hope this helps you, and I also hope you're having a good, safe weekend. And I thank you, sir.